What is happening, crypto crew? Get ready to ignite your screens because the market is absolutely electric, and we've got the breaking news that's setting the crypto universe on fire. The pace is relentless, the shifts are seismic, and if you're not plugged in, you're missing out on the biggest moves shaping our digital future. We're diving headfirst into a whirlwind of critical updates that you absolutely cannot afford to miss. We're talking about game-changing strategies, pivotal price points, and the pulse of the entire ecosystem. Are you ready to get the inside scoop? Let's go. First up, a titan of the stablecoin world is making some seriously strategic revisions to its operations across several established networks. This move could redefine how users interact with digital assets on these platforms and signals a broader industry trend toward optimization and future-facing technologies. We're breaking down exactly what this means for you and the networks involved. Then, we're zeroing in on the king of crypto itself, Bitcoin. Analysts are dissecting the charts, identifying the precise conditions that could either fuel an epic continuation of its recent rally or signal a period of much-needed consolidation. The numbers are in, and the stakes couldn't be higher for this digital giant. What's the magic number that could keep the bulls charging ahead? But the tension doesn't stop there. We're heading back to the critical $100,000 mark for Bitcoin, a level that's proving to be more than just a price point. It's a true test of market sentiment and the resolve of the entire bull run. Is this the moment of truth, or just another hurdle to overcome? We've got the expert analysis you need to understand the gravity of this situation. And finally, we're digging into the latest data that suggests a potential shift in institutional focus, with one major asset seemingly capturing more attention than Bitcoin itself. This could have massive implications for where the smart money is flowing next. You do not want to miss this. Stick around, hit that subscribe button, ring the notification bell, and let's get into it. A stablecoin giant realigns its network strategy. A major player in the stablecoin ecosystem has announced a significant revision to its long-term support plans for several established blockchain networks. This strategic pivot involves discontinuing direct issuance and redemption services on legacy platforms including Omni, Bitcoin Cash SLP, Kusama, ETH, and Algorand. While users will still be able to transfer tokens on these networks, official support, akin to that provided for more actively developed blockchains, will cease. This decision marks a departure from an earlier plan announced in July 2025, which had slated a complete shutdown of redemptions and freezing of USDT tokens on these 5 chains starting September 1, 2025. The company's leadership cited a comprehensive review of blockchain usage data, market demand, and crucial feedback from community stakeholders and infrastructure partners as the driving force behind this updated strategy. Despite acknowledging the foundational role these networks played in the stablecoin's early growth, the volume of USDT circulating on them has seen a substantial decline over the past 2 years, prompting a reallocation of resources. The CEO emphasized a commitment to staying relevant and efficient in a rapidly evolving industry, stating that winding down support for these less active chains will allow the company to concentrate its efforts on more scalable and widely adopted networks. This move aligns with the company's broader expansion into Layer 2 solutions and emerging blockchains that offer enhanced interoperability and transaction speeds. Notably, the company also revealed plans to launch its stablecoin on the RGB protocol, a development poised to bolster the Bitcoin ecosystem with enhanced privacy, scalability, and flexibility for smart contracts. This integration, following RGB's debut on the Bitcoin mainnet, positions the stablecoin as the first major token to leverage RGB's client-side validation, promising greater privacy and efficiency for transactions. This significant strategic shift from a major stablecoin issuer is already sparking conversations across the crypto community about the future of network support. But as one giant pivots, another is making critical moves that could dictate the very direction of the market. Stick around, because we're about to dive into the key levels that could determine Bitcoin's next major price action. Bitcoin's next big move, the $114K hurdle. As the digital asset landscape continues its rapid evolution, All eyes are on Bitcoin as analysts pinpoint a crucial price level that could determine the continuation of its current rally. According to prominent trader Sam Price, a weekly close above the $114,000 mark would represent a significant bullish signal, bolstering positive market sentiment. Price noted that Bitcoin bulls are actively defending the $109,000 support level, and the long green candles observed in recent trading sessions indicate strong buying pressure. While acknowledging the possibility of some sideways movement or consolidation, the overall sentiment leans towards continued upward momentum if key levels are maintained. Further reinforcing this outlook, analyst Rect Capital highlighted the critical importance of Bitcoin reclaiming $114,000 as a support level. Failure to do so, Rect Capital warns, could lead to a prolonged correction period. The analyst emphasized that the current market cycle has seen downward deviations, making a weekly close above $114,000 a vital indicator of sustained bullish sentiment. This level is seen not just as a price target, but as a confirmation of the market's strength and commitment to the upward trend. Michael van de Poppe, founder of MN Capital, echoed these sentiments, identifying the $112,000 support level as particularly crucial. He cautioned that a failure to hold this level could trigger a significant downturn across the broader market. His analysis, presented on August 28, suggested that while a rebound might occur after breaking down from previous levels, it could ultimately prove to be a relief rally if $114,000 solidifies as resistance rather than support. The market's reaction to these price levels is being closely monitored, with Bitcoin trading around $110,500 at the time of writing, experiencing sharp intraday movements that underscore the current volatility. Technical indicators on the daily chart also present an interesting picture, with the formation of two bullish megaphone patterns suggesting potential for a significant price surge, with some projections even reaching $260,000. However, the immediate focus remains on the short to medium-term price action and the ability of Bitcoin to decisively break through and hold above these key resistance levels. The interplay between these support and resistance zones will be critical in shaping Bitcoin's trajectory in the coming days and weeks, with traders and investors keenly awaiting confirmation of a sustained bullish trend. These price levels are more than just numbers. They represent the very battleground where the future direction of Bitcoin is being decided. But even as Bitcoin navigates these crucial junctures, another significant price point is under intense scrutiny, threatening to shake investor confidence. You won't want to miss what's happening at the $100,000 mark. Bitcoin's $100K crucible, a test of market resolve. Bitcoin is currently navigating a critical juncture, teetering precariously close to the significant $100,000 support level. This pivotal price point is not merely a number, but a psychological and technical stronghold that has historically galvanized buying interest and sustained bullish momentum. The market is on edge, with investors and analysts closely watching to see if this crucial threshold will hold, especially amidst recent volatility and shifting market dynamics. The integrity of this support level is seen as a key determinant of Bitcoin's short to medium-term trajectory and a strong indicator of the overall market's health. Technical analysis, as highlighted by experts like Giulio Morno from CryptoQuant, indicates that a failure to maintain support at $100,000 could trigger a cascade of negative effects. This level acts as a vital marker, separating potential bullish continuation from a more pronounced downturn. Simultaneously, the $112,000 resistance level is emerging as another critical battleground. Breaking through this barrier is considered paramount for reigniting a robust bullish outlook and potentially setting the stage for a new rally. Conversely, if Bitcoin falters at this resistance, it could reinforce bearish sentiment and lead to further price declines, potentially testing lower support levels. Market sentiment and trading volumes are key indicators in this environment. High trading volumes accompanying price surges typically provide strong validation for support and resistance levels. However, dwindling volumes during price movements can raise concerns about the conviction behind those moves. Adaptability and a keen understanding of these evolving market conditions are essential for traders looking to navigate the current landscape. Bitcoin's price movements have significant ripple effects across the entire cryptocurrency ecosystem. A breach below $100,000 could incite widespread panic and trigger corrections in altcoins, while a successful push above $112,000 might ignite a broader market-wide rally. Analysts are also cautioning about potential lower support levels, with some suggesting that a break below $100,000 could lead to Bitcoin testing the $88,000 mark. Such a move would not only signify a departure from the coveted six-figure status, but could also precipitate a wider market correction. Broader macroeconomic factors, including inflation data and regulatory developments, continue to exert considerable influence on investor perception and risk appetite. In this context, Bitcoin's price behavior remains susceptible to external economic currents until regulatory frameworks become more defined. The coming days are crucial, as they will likely provide clarity on whether Bitcoin can reclaim its bullish vigor or faces a substantial market correction, with the balance of market forces holding the answer. As Bitcoin battles to hold its ground, the broader institutional landscape is revealing fascinating shifts in capital allocation. While Bitcoin faces its own set of critical levels, new data suggests where institutional investors might be directing their attention next, and it might surprise you. We're breaking down the latest inflow trends that could reshape the crypto investment narrative. Institutional flows signal a potential shift in crypto investment. Bitcoin is currently facing significant pressure, with its price testing the critical $100,000 support level. Analysts are issuing warnings of a potential extended bearish phase if key resistance levels are not reclaimed. Technical indicators, such as the Relative Strength Index, RSI, dipping below 50 and descending channel breakdowns, suggest continued downward pressure. A crucial Fibonacci level, at $104,000, is being closely watched for near-term stability, with a failure to hold this potentially leading to a decline towards the $100,000 floor. The broader market sentiment is further influenced by institutional investment trends, which have recently shown a notable divergence. While U.S. Bitcoin exchange-traded funds, ETFs, have become a dominant source of investor exposure, consistently generating substantial daily trading volumes, recent inflow data indicates a shift in institutional preference. Over a recent 4-day period, Ethereum ETFs attracted $1.24 billion in inflows, significantly outpacing the $571.6 million seen in Bitcoin ETFs. This disparity suggests a potential reallocation of institutional capital towards Ethereum, possibly driven by a combination of macroeconomic factors, product diversification strategies, and evolving market perceptions of asset potential. On-chain data presents a mixed but generally cautious picture. Exchange net flows, tracked over a 30-day moving average, have remained negative since April, meaning more Bitcoin is being withdrawn from exchanges than deposited. This trend is often interpreted as long-term holders accumulating and securing their positions, which can act as a supply tightening mechanism and provide a potential floor for prices. However, despite this on-chain accumulation signal, the overall market sentiment, as reflected by technical indicators and price action, remains bearish in the short term. Analysts emphasize that the market direction hinges on Bitcoin's ability to reclaim the $112,000 level. Successfully holding this resistance could trigger renewed bullish momentum and pave the way for a broader market recovery. Conversely, failure to do so could reinforce bearish sentiment and lead to a deeper correction, potentially testing the $100,000 support and possibly lower levels like $88,000 if the psychological barrier is broken. The interplay between these technical levels, on-chain data, and evolving institutional flows will be critical in determining Bitcoin's trajectory. Investors are advised to monitor key technical indicators, volume, and broader macroeconomic factors, such as inflation data and Federal Reserve policy, which will continue to shape market sentiment in the coming weeks. This potential shift in institutional focus is a critical development that could redefine investment strategies in the crypto space. But before we sign off, let's quickly recap the most vital updates from today's show and make sure you're subscribed for all the action. All right, crypto fans, that's a wrap on another high-octane news cycle. We saw Tether strategically revise its network support, Bitcoin holding strong around key price levels, with analysts watching $114K for continuation. The $100K mark proving a critical test for Bitcoin's bull run resolve, and a fascinating trend of institutional money potentially favoring Ethereum ETFs over Bitcoin. Don't miss a single beat, hit that like button, subscribe for more essential market intel, ring the notification bell so you're always in the know, drop a comment with your thoughts, and follow us on all our social channels to stay connected. We'll see you on the next one.